Hey there, and welcome to the Real Estate War Room Live. This is where we talk about real deals and real ways that we can all help build wealth in America today. I've got our guest, Zach Thomas. Zach, I appreciate you coming on the podcast today and sharing your knowledge. Zach's been incorporating lessons in business acumen from his grandfather and a strong work ethic instilled by his parents, a middle school teacher and a postal worker. Zach entered the finance world starting at Wells Fargo, where he refined his skills, eventually leading a wealth management department at Cadence Bank. Seeking to offer comprehensive services, he found his niche at Heritage Family Offices, assisting small and medium-sized business owners. Today, as an owner and independent advisor, Zachary combines cutting-edge technology with personal attention to serve his clients better. Operating in a fiduciary capacity, he places his clients' interests above all else. Beyond finance, Zach is dedicated husband, fitness enthusiast, devout Christian, and lover of his nature. And Zach, I appreciate you coming on. Welcome to the episode and can't wait to hear what you've got to say.
Thanks for having me on, Ryan.
Excellent. So, in addition to everything that we've said there, I'd just love to kind of hear your story of, what it is that you're doing in the world, what's your passion and how you help people and, where you got started.
Sure. Anybody that knows me knows that I love to tell a good story, and I don't know that there's a better one that I know than my own. So I grew up in a small town in Southeast Texas, as you kind of mentioned in the bio. My mom was a school teacher. She taught middle school at kind of a lower end school, and then my dad was a postal worker. And so I like to say that I got my work ethic from my parents, who were both very blue collar workers. But then I had a grandfather who got into franchising probably in the late 50s, early 60s. So before it was like really hitting its stride. And at his peak, I think he had 7 or 8 Kentucky Fried Chicken franchises. And so by the time I came along, my grandfather had long retired and kind of moved on to some other business ventures. But being around him and getting to interact with him, I kind of picked up on some of the business acumen and how to think about things, like an entrepreneur. And I would say that really helped mold and shape where I'm at today and kind of the steps that I would take to get where I'm at. So fast forward a little bit on my professional background. I started off in financial services world at Wells Fargo, and this would have been 2015 or so. Started off as a teller and just kind of worked my way up the corporate ladder. Ended up getting licensed there. Had a great experience, but also learned that working with big companies also comes with a lot of red tape, and I didn't necessarily feel that I could help my clients the way that I wanted to. And so I had the opportunity at this point. I was still in Southeast Texas, and so I got headhunted to move out to Austin and work for a financial planning firm, and kind of bounced around at a couple of different shops, which is pretty normal in my world. But I had the opportunity to work at a couple of different places that really allowed me to focus in on a couple of key things that really impact the way that we're doing business today. So one of which you'd mentioned was Cadence Bank. So I was brought in to help really develop their entire wealth management program. They didn't have one for Central Texas, so I came in and I launched it. And effectively what my job was to build relationships with a lot of our commercial lenders and position myself as a strategic partner that could help them add value to their clients by offering additional services on my side of the house. And so did that for about 3 years, ended up getting a lot more complex types of clients, middle market business owners, C-suite executives. And I started waking up to the fact that I didn't have the team around me that I wanted or I needed to really be able to support these clients the way that they needed to be supported. So during that time, I ended up kind of trying to build some partnerships between different attorneys and CPAs, and pretty consistently what I found is a lot of people don't like me playing in their sandbox. They kind of just want to stay siloed in whatever their specific hole is. And I've always found a lot of value in collaboration and working together, as a team. And I think that our clients win at the end of the day whenever all the professionals are talking. And so I'll share a story of really what became the catalyst for doing what I'm doing today. I had a client, we were putting together a pretty complex deal. It was a $6 million deal. And this specific person had highly concentrated company stock that they had worked at for a very long time. And at this point, probably comprised of, let's call it 85 to 90% of their total net worth. And so we started having a conversation about how do we unwind this position? What's our total exposure that we would like to have access to it? And I had a guy who had been helping me out on the estate planning side, building out trust and, doing some more, complex type of tax planning. And so we got the client and the CPA on board, the attorney signed off, and this was probably mid to late October of 2021. And for this specific strategy, we have an end of the year deadline. So the guy calls me up on, I think it was November 1st, right around the end of October, beginning of November. And he was like, "Hey, Zach, sorry to share this news with you. Got this incredible opportunity. Not going to be able to help you put into place that thing that we talked about over the past couple of months." And so now I'm kind of scrambling to figure out what in the world am I going to do. I already set the expectation with the client. This at this stage, let's say that the total tax liability, we're going to save the client $400,000 to $600,000 in taxes by placing this specific strategy. And so I go back to the CPA and I'm like, "Hey, do you guys have any? Do you know anybody that could potentially help out with this?" And so one of the companies that he ended up introducing me to was the multifamily office that I ended up working for. And so to kind of condense the story, long story short, had a great experience with them. They ended up doing a lot of the tax work and legal work. We hit really a home run for the client. Everybody ended up winning as a result of just being able to coordinate and communicate. And through that interaction, I got connected to a multifamily office. And for the plethora of people who might be on this who are like, "What's a multifamily office?" Is talking about apartments or real estate. It's a different concept. In the financial services world, a multifamily office traditionally has only been applicable to very high net worth individuals that can basically go hire an entire team of CPAs and wealth managers and attorneys, et cetera. And so over the past 10 years or so, these multifamily office outfits have been popping up. And so the one that I worked at, we had a vertically integrated CPA firm, law firm, wealth management firm, and insurance firm. And so through that interaction with the C-suite client that I was telling you about, I started getting having the opportunity to engage in a conversation and what it would look like to make a transition over to their platform. And so we went back and forth for, I don't know, 4, 5, 6 months. And effectively where we landed is they wanted to franchise out their model. They wanted to build out Austin as a territory. And so they were bringing me in as an equity partner to help them build out their entire territory. And so the vision was 3 to 5 years down the road, I would have something like 30 to 50 employees underneath me. We'd be managing at least $1 billion in assets. And you can imagine, as a 28-year-old guy who's been in the industry for a couple of years, that sounds pretty promising, right? It was very attractive. I got flown out to their headquarters a number of times. And so, I talked to a number of my mentors, and I was like, I guess it's the deal is too good to pass up, right? So I bit the bullet, made the transition. Let's say there were some unrealistic expectations from the get-go with that opportunity. And the long and short of it is, after I worked there for about a year, they decided that they were going to pivot, and instead of building out like a large retail arm and kind of think of like franchising in a bunch of different metropolitan areas, that they were going to condense and keep the team really small. So at this point, as you can imagine, I'm kind of left with a lot of question marks. What do I do next? Do I stay here and kind of transition into the team and change what my role is going to be? Do I explore, pivoting out and maybe going and working with somebody else? Or do I eventually, or, should I transition out and do my own thing? And so that led to me asking a lot of very difficult questions in 2023 about, what do I see? Like, what's my vision? What do I see on the horizon for my family? What do I think is best for my clients? What's going to make sure that they get taken care of at the end of the day? And long story, made short, is that none of the opportunities that I explored were really attractive, or I didn't think were going to meet the needs of what my clients were. And so decided it was time for me to hang my own shingle and start up my own firm. And so through some of that process, some of the experiences that I've had in financial services up to this point was I noticed that the traditional playbook of most wealth managers is to get really buddy buddy with people and then hope that eventually they would have some sort of liquidity event in the future, and then you're kind of the go-to person that gets to manage the assets. And I would say that never really resonated with me, and I built my business kind of in a different way. And I always worked for firms that never allowed me to bill for my time the same way that a CPA or an attorney does. And so over the years, I found myself giving away a lot of free consultation and free advice just because I wanted to see my clients succeed. So I've had some clients that were on the verge of bankruptcy. We were able to come in and structure a plan that helped them exit their business without taking a BK. Like, I sleep really good at night, having the opportunity to help people in those types of ways. Other times it's coming in and helping people maybe clean up the books or thinking about a growth strategy. So as I was really envisioning where do I feel like I can add the most value to a lot of the clients that we're working with, really started focusing specifically on working with small business and entrepreneurs, and to niche it down even more, a lot of blue collar industries, which, Brian and I are both in Austin, Texas. I don't know that that's a big focus for a lot of people in our backyard. But the way that I grew up very blue collar, I find that I connect with these people a lot, and there's not a lot of industry professionals that really want to go work with, the welder or the electrician or the plumber or the construction guy, and they need a lot of help. And so where we're at today, the way that we've structured our firms is there's really two types of services that we offer. One would be, we still do traditional asset management and financial planning, but we also do a lot of consultation as well. So working with a lot of small business owners, primarily either helping them think about their growth strategy. So I'm at $1 million in top line sales. I'm working 80 to 100 hours a week. I know I don't have the right team around me. I haven't delegated out responsibilities, and I don't know what I need to do to get to $2, $3, $4, $5 million in top line revenue. And I just don't have the time anymore for me to continue to consolidate more responsibilities. And so I've gotten to the point where I need to hire somebody to help me think about these things and kind of get my head up out of the sand and think about where I'm going in the future. So that would be one of the types of clients that we're serving. And then secondly, doing a lot of succession planning. So I think we've all started seeing in our news feeds, through CNBC and a variety of different articles, the amount of baby boomers that are about to start transitioning out of their businesses. I don't know the statistics. You might know it, Ryan. I think it's somewhere in the trillion with a T dollars of market value of the amount of assets that are about to transition, whether that's an internal transfer to a family member, whether that's selling it to an employee that currently works for the company, or whether that's going to market and selling the business, through some sort of broker, M&A type of firm. So we're coming alongside them and helping them think through what's their exit strategy. How do we put the right types of mechanisms in place? How do we build the right team around them, whether that's business attorneys or M&A advisors, a variety of different people that we're bringing to the table, SBA, specialists, and really just trying to do our best to help these business owners that have spent 30, 40 years building a business, making sure that they get to retire with dignity and walk away with the business feeling good about who they're leaving it behind to. So That's a little bit of my background in a nutshell, and kind of where we're at as a firm right now.
Yeah, absolutely. No, you very comprehensive. I mean, you've done quite a bit of research, and like it sounds like it's very important to you to align what you're doing in your interests with the clients that you're working with.
Sure.
One of the things that I thought was that really stood out to me when we were talking is that you do like a fee only
Yep.
for your management style instead of a assets under management perspective. So I'd love to kind of chat, what is that? Because I didn't know what it was at first. So just kind of
Yeah.
what that is, and then how does that help align you as well with everyone that you work with?
Yeah, that's a great question. Um, Coming up in the industry, what you'll find with a lot of wealth managers and financial advisors is, in my opinion, the incentive structures aren't aligned for both the advisor and the client to win. And so sometimes this can create a zero-sum game, which means that the only way that I win is if you lose. And so I've had some pretty bad experiences working for some firms that wanted to push big commissionable products that I just didn't think were in the best interest of my clients.
Mhm.
And for anybody who's not a nerdy financial professional, they probably don't know the difference between what is the responsibility that your advisor has whenever they're making a recommendation. And there's really two different categories that you can fit into. You can operate as a broker, which means that I don't have any fiduciary duty to make recommendations. I am selling you a product, and this is a transactional relationship. The other side of the house is in a fiduciary role, which means that we have a relationship. And from a legal standpoint, I have to put your interest before my interest. And so, as we were thinking about the way that we were going to structure our firms, I try to be somebody who's very high in integrity and making sure that not only we're saying the right things, but we're actually structuring our firm in a way that prevents us from a lot of the greed and big egos that we see in my world. And so, what that meant was walking away from being able to sell a lot of commissionable products, all commissionable products, actually. And so, the way that we're structured as of today, we don't accept any commissions from any third-party companies. We still advise on a variety of different, products, but we disclose to clients we're not going to get any type of kickback if you go work with X company compared to Y company. It really doesn't make a difference. We get to be agnostic and we get to be indifferent. And as part of the way that we structure that is the only way that we get paid at the end of the day is by what the client pays us, whether that is a flat fee engagement, which means that somebody is paying us directly via ACH or check. We don't have any clients that pay us via check. Thank God for that. It's all ACH. But it's an advice only subscription fee. And then we also have on the investment management side of the house, we still do the traditional asset management fee, which is around a 1% fee. And the reason that we're still structured like that is because we still believe that incentive structure or that compensation structure allows us to align our incentives with the client's incentives, which means that if the accounts are growing, then we're getting a pay increase. If the accounts are decreasing in value, that means we're getting a pay decrease. So we're incentivized to work very hard for our clients because it means that we also get to win at the end of the day.
Yeah, I resonate with that kind of fee structure. I like anything where you can align the incentives of the clients with the people that you're working with. I know on our deals we do profit splits as well, and I want to make a lot of money, so I better make a lot of money for the clients so that I can also get paid. So, yeah, it definitely makes sense. So, one of the things you mentioned, you work with a lot of blue collar service work industry people, and you said you help them grow their business and kind of get unstuck with revenues of what under $1 million or maybe $1 million up to the 2, 3, 4, 5 number that
Yeah,
you're helping
our,
them.
our sweet spot's kind of 1 to 10 million top line revenue. We do have some clients that are below that range. We have some clients that are a little bit above, but I find that 1 to 10 is kind of the sweet spot where we feel we can add a lot of value.
Yeah, and are you like helping them make decisions with personnel and who they're hiring and getting out of their own way?
It really just depends on what the client needs at the end of the day. And so sometimes it's, hey, Zach, I need a fractional CFO that's going to come in and help me do cash flow projections and tax strategy. Sometimes I've, somebody who comes in and they're like, hey, I'm having trouble retaining the right types of employees. I don't really know how to build out any type of compensation structure. I don't know how to attract, top talent. Sometimes it's, I just feel stuck with where I'm at. I don't really have a vision. I just kind of have this giant pain in the butt, business that is feels like it's constantly stealing, time for me. And so it's on an individual basis because we are a boutique firm, smaller firm. Whenever I engage a client, I get to be I get to create a plan that is specific to them. So it really is driven by the feedback that they're going to give me. I do have like a little one pager document of, hey, here's kind of the buffet of things that we could talk about. What are the top 3 things that you feel that we could add the most value? And then we just allow that feedback to drive the process. And what I find is just keeping it short and simple. We have kind of a living document that's a one-page document. Hey, here's all the things that you said that were important. Here's the top 3 things that you said that we wanted to focus on in this meeting today. And so we just start kind of going down the list and knocking things off. And what we found over time is that as you're taking care of things, I become more aware and more attuned to what the goals of the business owner are. And so I'm able to bring more value because now I know, hey, I know that you told me that you wanted to sell this business in 2 years, but that's not really the trajectory of where we're going. It feels more like you're trying to get this business to be like a turnkey business to where you're not going and selling it to somebody else, but maybe you put in 10 hours a week and it just pays you a consistent, amount of income. And so over time, as that relationship developments, I feel that we're able to add more value because we're more attuned to what the business owner, wants to accomplish. And then that just makes my life a lot easier because we already have the playbook of things that we can make recommendations around. And the more information that we have, I feel like the stronger recommendations that we can make.
Yeah, absolutely. And, obviously every business is unique and every client's going to be unique. And some of those preferences may even change over time or as the business grows. I'm curious, if you've been doing this for a while and you've kind of got your sweet spot of the niche of clients you work with, is there any practical advice that's like obvious to you that most people just don't know about or that you're constantly having to reiterate?
Yeah, where to start? There's a lot of low hanging fruit. I think the challenge that I see with founders a lot of time is the thing that got you to where you're at today is not the thing that you're going to need to get you to where you're going in the future. And so what I see very consistently is in those first couple of years, you're scrappy, you're getting out there, you're grinding, you're hunting deals, you're hunting clients, you're chasing after whatever slides across the desk, right? But eventually you look up and it's like, I'm not spending my time on the things that I know that I should be or the things that I want to be doing inside the business. And so pretty consistently, I see small business owners, that's the point where they go and make their first hire. And that first hire, man, it's hard. It's a big deal. I know that you just brought on an executive assistant. You start looking at
a lot because of your recommendation for the one that you have as well. So yeah. Thank you.
You start looking at the numbers and it's like, man, I better get this thing right because this is about to be a big chunk of the pie that I'm going to be, sending towards this person's salary. And what Absolutely. I find is that I don't have a problem with people having standards. I have a problem whenever people want to control too much of the situation and they don't allow their employees to have ownership of the responsibilities. And so what that means is that it breeds and it creates a culture and environment where people expect to become micromanaged. They want constant feedback about everything. And then the business owner looks up 12, 18, 24 months and they're like, this person takes no initiative. They don't ever do anything. Like I have to tell them everything that they need. It's like, well, how did you set the expectation whenever you onboarded them? Did you micromanage them about everything? Did you give them the ability to make mistakes, right? Like that's a really big deal. And I think that can tend to put a sour taste in the mouth of a lot of small business owners. And it's like, oh, I've got this bad taste in my mouth. Tried to hire somebody, didn't work. They didn't have the quality that I wanted to. I lost a handful of clients, as a result. And it's like, yeah, those are all normal parts of just growing pains. Like this is what it means whenever you start entrusting your baby to other people, right? They're not going to treat it like your baby. This is a job for them at the end of the day. And you have to be okay with the fact that things are going, your expectation should be getting to good enough instead of perfection. And so, like, if I had one point of feedback for a lot of small business owners or entrepreneurs, I think it would be learn to be okay with good enough from your employees. And I'm not saying don't strive for excellence. I'm saying give them the grace to make mistakes and to learn from those mistakes. Because what you're going to find is if you go and you start doing this, like, oh, they made a mistake, let me absorb this back in, right? You end up like a lot of the people that I end up engaging. It's like, I don't have any time. I'm working 80 hours a week. I have all these responsibilities. And we go through and we do an audit. It's like, where are you spending your time? What are the responsibilities and the tasks? You would be amazed at the amount of people that are running multi-million-dollar, small businesses, 3, 4, 5, 6, 7, 8, 9, $10 million of top line revenue, and they're still doing their own bookkeeping. I'm like, how many hours a month are you spending doing your own bookkeeping? Like, we need to outsource that yesterday. And so it's getting the owner to think about what's the highest and best use of their time and being okay with certain things just being good enough.
Yeah. I got to reiterate that as well, because, since I brought on my executive assistant, there have been so many things that she has become better at than I am. And so I'm happy to say, hey, take this on, you do it. And then it frees up my time. And the way that, our company does deals, we basically flip multifamily apartments. Sometimes we hold on to them for a little while, but, the highest and best use for me is talking to people who might sell me a deal, raising capital from investors who might want to invest in one of our deal, or the first, 3 to 6 months when we take over a deal where I need to be in there and making big decisions about the upgrades and the construction that we're doing. And outside of those three, I mean, there's a lot of other decisions that need to be made, but they're not priority. They're not what drives the business. So yeah, I think you said it super well. So I am kind of curious, if there are people that, I guess another question for you is, you have a lot of your clients, you said, about transitioning the business from the parents either down to the children or selling it. I don't know the numbers or statistics offhand, but I do see that a lot of people are, kind of just aging in general, and people are living longer, and people still want to retire at 65 and, kind of hand their businesses off to their kids. Or there's a lot of businesses that just were built without the technology and the marketing and advertising that we have nowadays. And maybe the kids want to take it on, but maybe the kids want to be Instagram influencers or, whatever else there is out there. I do think that people don't want to really do the trades. I bet it's probably hard to even get people to want to become plumbers and handymen nowadays. So I'm kind of curious, your opinion on, like, what's going to happen with all of the, parents that come in and all these businesses that have to have something happen. Are kids going to take them on, or do you think most of these are just going to get sold or just taken over? Or where do you see the market?
I've already started seeing this anecdotally with a couple of people that I know that are, they're not C-suite executives, but maybe like director level, let's say, mid to late 30s, early 40s. They're hitting their stride in their career, and either they're getting burnt out working at their companies, or they see some displacement on the horizon through some avenues like what artificial intelligence is doing. And so I know 3 people personally that are in this situation, and they're looking at going and purchasing a blue collar oriented business. So that's just from my own limited purview, and maybe it's just because I'm more tuned to it because this is kind of the area that I'm focusing in on. But I think what the industry, not the trends, that's the word I was looking for. I think what the trend is going to be moving forward is, as boomers continue to age and they transition out of their business, there is going to be a big gap inside of the trades, and not just trades, but also healthcare is another sector that we're really focusing in on. Not for my practice, but my wife is an RN. And so we're kind of thinking about doing some some business ventures with some of the opportunities that we see in that sector as well. And as more of these boomers transition out, what you're going to find is that there's a lot more work that they need to be done, whether that's taking care of their health or helping out with doing, stuff around the house. Like I used to be able to fix my own toilet. Well, now I'm 80 years old and I can't fix my own toilet, right? I need somebody else to come in and help me out with these things. And so I think what that's going to create is it's going to create more opportunity in the market, because these boomers are sitting on a lot of assets that are going to get spent somewhere, right? And so I think a lot of people are going to see this as an opportunity to enter into the market. And what were businesses that were not attractive a couple of years ago, maybe even right now, I think are going to start becoming more attractive, because there's going to be more demand and less people that are operating inside of those specific industries. So I'm going to say this, and maybe I'm going to get a lot of hate mail afterwards, because I would imagine there's probably a tech-centered following of people who are listening to this. But I think that we are going to continue to see the displacement of a lot of technology jobs through artificial intelligence. And I'm not saying that those won't be replaced with other iterations, but I think there are some people that maybe won't be able to be reskilled into technology. And so I think these people are going to have an easier time making a career transition into blue collar oriented businesses, where they can go do something with their hands and actually like have something to work on. Like I'm sure I know people who have been out of work for 8, 10, 12 months since a lot of these technology layoffs have been going on. And so I've been talking to them about, hey, have you started exploring like any blue collar, oriented jobs, going and working as maybe you worked in sales and you're going to go do some sales for a blue collar business, or maybe you've been a middle manager, and so you can go help, manage a team or be a foreman or something like that. So that's kind of what I see on the trajectory. I don't know that that's an overnight thing. I think over the next 5 to 10 years, we'll start seeing, more of those trends move in that direction.
Yeah, absolutely. So I'm curious, you deal with a lot of, it sounds like, higher net worth or entrepreneur clients, and there's a lot that's going on. Like you said, the displacement with technology workers. I've also seen, just in general, a couple more layoffs coming. I've been reading some articles about how, in general, consumer debt has gone up quite a bit because wages haven't really increased with inflation as much. And so people are spending quite a bit more, and the stimulus money isn't there anymore. Interest rates on credit cards have gone up quite a bit. People have just more credit card debt than before. Maybe student loan debt hasn't gotten forgiven and had to start getting repaid. Mortgage interest rates are high. I know multifamily is going through foreclosures or difficulties with their balloon payments. It seems like there's turmoil in the market in general. There's talks about lowering interest rates in general. I think there's even, I was reading about the banks that were going to have to close, and they government stepped in and said, hey, we'll give you from March until 12 months later, next March, to I don't know the details of it. You may know a little bit more, but they basically got a delay on having to have this big loss that did not get extended, and now that's going to come to reckon here at the end of March. So I'm curious about your thoughts about, is it a good time? Is there opportunity out there? Is it like, are we in for a tough time coming ahead?
I think some sectors will do well. I think other sectors are primed to maybe not do so well. I have been following a couple of guys that specifically in commercial real estate debt, and I've seen some of the statistics and charts, of what you were talking about with a lot of balloon payments. That's one of the sectors that, holistically, I'm a little bit more concerned about, because there are a lot of banks that have concentrated on specifically commercial real estate. The one that I worked at had a lot of commercial real estate in their portfolio. And so the other side of the coin, which I don't hear a whole lot of people talking about, but you have a lot of office space in big metropolitan areas that was developed out pre-COVID by Fortune 500 companies. And those things are just sitting there now. And that's how local municipalities make their tax revenue is by taxing
Yeah.
on those buildings, right?
Mhm.
And so what happens whenever people don't go back to the office? What happens whenever that office space isn't needed anymore? These local municipalities, they can afford to take a 30 or 40%, haircut on their tax revenue because those office buildings aren't being used anymore. And so um, in the medium to long run, I've talked to a couple of people about this, and you would have more insight into this, and I'd be curious to kind of pick your brains on it. But I'm curious if at some point the federal government steps in and says, "Hey, we want to start retrofitting a lot of these office space for like more affordable, housing projects, and starts
Mm.
offering like some attractive tax credits as a result." And the feedback that I've gotten from a couple of people that I know in real estate development is the way that the buildings were designed, you can't really do that kind of stuff. And I don't know, I'm just of the opinion that if there's a gap in the market, there's really smart people that'll get in there and figure out a way to come up with a solution, if the incentive structures are correctly. So those are some of the things that I'm seeing, specifically in real estate across the board. It's rubbing the magic crystal ball and figuring out what is in store for 2024. We're currently of the opinion that rates are going to start coming down sooner rather than later, and I think that's going to be
Mm.
a stimulus to the economy. We are in an election cycle where
Mm.
no sitting president ever wants to have a bad track record for the economy on their record, right?
Yep.
And so just the signaling and rates coming down, we've seen a huge run up in the market, and I think that is going to have some lagging effect to the positive. My concern and what we've expressed to some of our clients is those expectations have already been built into the market. That rates are going to start coming down. I think I could be wrong about this, but I think I maybe saw like J.P. Morgan Chase or one of the other big banks come out and offer some predictions. I think they were expecting at the end of 2024 that the federal funds rates would be between like 325 and 350 basis points, which would be over a 200 basis point decrease from where we're at
Mhm.
today. It's like, I don't know that we're going to be moving that aggressively, throughout 2024, but I
Mhm.
am cautiously optimistic that rates are going to move faster than are expected. The other side of the coin is what happens if they don't? If that's already been priced in
Mhm.
the market, do we have some sort of correction if the Fed decides, hey, inflation data is not where we want it to be at for us to start thinking about decreasing rates, and so we're going to kick the can down the road a little bit longer and wait for more data to come out. I think there could be some more pain if that's the result, because as you mentioned, there's a lot of sentiment that that there's going to be some opportunity on the horizon. And if things continue to just get pushed out, further and further, eventually people get fatigue, and there's a lot of cash that's sitting on the sideline just waiting to get deployed whenever rates start coming back down.
Yeah. I mean, I would agree with those. I mean, from my perspective, I don't look into office so much. I think it's so curious if someone built like a $20 million office building. Some of these have dropped 50 to 80% in value.
Wow.
And if the cost to build it was that much, like there's got to be something you can
Mhm.
do to make money, at least to like keep it break even or maybe slightly cash flow positive until the
Sure.
value, maybe it never goes back as high as it was because people just never return to the office. But that's a lot of material in real estate. I have heard a lot of people doing conversions from older offices to
Mhm.
multifamily. They're expensive to do, and there are certain building styles, like
Sure.
interior offices, don't have a whole lot of windows, and so
Mhm.
you typically need some kind of visibility there. But yeah, I'm curious to see, especially what happens in the office space. I think it should be repurposed
Yeah.
because there's still great buildings out there. So I'm curious now as well. Okay, so you have a wide breadth of lots of different people that you work with, and it sounds like you have a good grasp on what's going on in the macro economy. Do you see any opportunity, or do you see any places that people can they want to get ahead this year? Like where do you see some opportunity to focus in on?
Ooh, that's a good question. We are a little bit more bullish on local real estate in the Austin area. So I've talked to a number of clients who, let's say fourth quarter, early first quarter of this year, they were kind of on the fence. Hey, we're thinking about buying, but we want to wait for rates to come down. That's the sentiment that I've heard from everybody in the real estate world, which tells me that there's a lot of cash getting ready to deploy. And so I've been telling anybody that's been interested in real estate, seriously interested, it's like, hey, if you want to do something, I think right now is the time to do it, because as soon as we get that first 25 basis point decrease, like there's going to be a ton of cash that's going to flow into the market, and people are going to start having an appetite for buying again. And so I've been telling them there's a little bit of risk, right? Because we are at higher rates and things could turn south, and we could still slip into a recession. But I think the risk reward ratio is saying that there's more upside with where we're at right now than waiting another 6, 9, 12 months and hoping that rates start coming back down. And then you're just going to get ahead of the curve of, everybody else. I don't know that that's realistic with, a lot of the clients that I'm working with. So I'm encouraging them. I think you can get some discounts and some bargains. Right now it's a buyer's market. And so we're at some, really attractive, cash flowing properties. And then we're just under the expectation that as rates come back down, we'll have the opportunity to, refinance, and hopefully that'll free up some additional cash flow. Outside of that, in public markets, we've slowly, at the end of 2021, kind of saw that the bubble was getting ready to burst. Rates were going to come back down. And so we positioned a lot of our clients out of high growth and technology into more blue chip, companies. And so we've just been sitting out in dividend paying stocks for the past 2 years. And I started signaling to clients, my more aggressive clients, is like, hey, right now is the time. We're making transitions out. We're moving back into growth oriented companies. We started doing that fourth quarter of last year. For some of my more moderate and conservative clients, just setting the expectation, we'll probably start transitioning out of some of these blue chip companies. We don't want to get too far ahead of the curve because we could be wrong on our interest rate assumptions, and then we don't want to get punched in the gut if rate assumptions start coming back down and we start seeing more volatility. And then lastly, in like the alternative space, I'm very bullish on small business ownership, and so we're having a lot of conversations with clients about either expanding their operations, thinking about transitioning into verticals, purchasing privately owned businesses. We really like where multiples are with the rate environment today, and we think that moving into 2025, regardless of who takes office, that things are going to be primed for a really attractive economic upturn, I guess, not a downturn, whatever the opposite of downturn is. And so there are, I guess, 3 different pockets that we're keeping an eye on, watching very carefully.
Yeah, I'd have to agree with you there. I mean, obviously, I support all the real estate transactions. I think it'll be difficult if you don't know what you're doing.
Sure.
But yeah, I think I see and hear a lot of desperation out there in the markets, and some people are like kicking the can down, waiting to sell until it's like the absolute last minute or hoping a miracle happens. And maybe it will, maybe it won't. But if it don't, there's going to be some blood in the streets and people losing money and people to come in and get those opportunities. And yeah, I could obviously talk all day about real estate, but yeah, I think there is opportunity whenever there's a lot of variability and volatility, like we're seeing in the market these days. Well, awesome. So let's say somebody likes everything that you're doing here and they want the pleasure of working with you. Where does somebody find more about what you're doing, or maybe gets you as a client?
Sure. So you can find all of our contact information on Growth Horizons WM, as in wealth management, growthhorizonswm.com. That's where we have all of our information. We're very transparent with the services and the fees that we offer. So you can go on there and you can find exactly what we do, how we work with clients. There's a contact form that they can go in and fill in information, and we'd love to have a conversation.
Cool. Awesome. Well, I appreciate you coming on so much, Zach. It's been a pleasure, and yeah, we'll have to do this again soon.
For sure. Thanks, Ryan.
All right. Thanks.